Hello friends, this is Raj Sastri from Raj Option Trading. Today is Feb 27, 2022. Hope you're all having a good weekend. So we'll take a look at top stocks with a heavy insider and institutional selling. Many of these stocks are candidates to avoid, with few exceptions, of course. So it's very good to know what stocks to buy as well as what stocks to avoid buying. So with that, let's jump in. So we look at heavy insider and institutional selling and price more than $10. And also let's look at price less than $10 so you have a good picture. So with that, let's jump in here. First, we look at top stocks with a heavy insider and institutional selling and volume more than 300K and price more than $10. So we got the list here. Look, we got insider and institutional selling, and we got the stock with the price more than $10, as you can see here. And watch both insiders and institutional selling here. Many of these stocks have got good amount of insider and institutional selling, as you see here. And we should also look at the overall score. When the overall score is below 50 or so, it's good to avoid those names, or at least below 25, good to avoid them when there is insider buying and selling. We'll look at few examples here and go from there. And also I have provided both debt to equity ratio as well as quick ratio, and avoid the stocks where there is a when the quick ratio is below 1. For example, you got a few names here, and also high debtors indicated by debt to equity ratio here, which is a long-term debt. So those are some few thumb rules here, so you know what's going on. So we'll take a look at few examples and go from there. So let's look at first one here, OM or Outset. As you look through Outset, $42 stock, market cap is about $1.8 billion, as you can see here. Insiders are selling 38%, institutions are also selling 7%, and they got some sales and sales growth and gross margin. Gross margin is just 5%, that does not cut it. Net margin is squarely negative, as you can see here. RSI is high, that tells you stock has gone up despite of insiders and institutional selling. High short ratio, short sellers are breathing down the neck here, and stock is showing some strength in 5-day and 10-day due to short squeeze type scenario. Price to sales ratio is high, that tells you valuation is high for this company here. And look, overall score is 12, that's very low. And as you look through here, they're a free cash flow negative company. So stocks like this, it's good to avoid, even though there is a good EPS growth and sales growth here, especially given they have a high insider buying and selling. You could look at a few better companies instead of this one. So that's why I take a look at companies like this. There will be some exceptions, of course, but typically I would avoid stocks where the debt to equity ratio and quick ratio are red. In this case, it's not red, so it may be okay to trade this one. But take a look at the next one here, Cal. Cal is clearly a red flag for me, mainly because look here, they got high debt, which is long-term debt, and quick ratio is 0.3. That tells you they don't have enough money to meet the short-term obligations. So this one is clearly a stock to avoid because they don't have enough money, and at the same time, both insiders and institutions are selling. And look, their EPS growth for next year is negative. So you got to probably you should avoid stocks like this one. This one has got positive free cash flow, as you see here. So typically when they don't have enough money and folks are selling, both insiders and institutions, good to avoid. And then you got next one here, BGF, Big Five. Big Five is a little bit different scenario here. Look, they got a nice overall score that tells you they do have nice, they're good from a profitability and finance and growth perspective. So this one I would look at a little more closely. But look what's going on here. Short-term stock is sliding, so that's why probably at this time it's good to avoid, even though it's got a good overall score here. Given there is a insider institution selling, probably you should wait till the stock slide stops and then you can jump in. And you got a few more names here. We will not take a look at everything, but you get the eye picture here. Look, we got one more here, Lau. Love also similar story here. Look, Love has got good score 53, which is okay, but look what's going on. They don't have enough money. They cannot completely meet their short-term obligations. I want this quick ratio to be above 1. And as you can see, your stock is not doing great. It's not doing well, as you can see here. Nice expectation for the future though, and they do have enough money, as you can see here. um, Altman Z score is 4.0. I say, for stocks like this, let it come down or let it stabilize, then you can jump in instead of buying right now. And we got a few more candidates. We'll look at one more here, EVBG, our bridge. Look, this one has got overall score of 26. Look what's going on here. Stock is sliding 1 day, 5 day, 10 day, 1 month, 3 months, 6 months. And insiders and institutions selling, as you can see here. I say, on this one also, even though overall score is a little better, 26, I would wait. This company does not have enough money. Financials, Altman Z score is below 1.8. That tells you it's not good to buy at this time. Let it stabilize, then you can jump in. And we got a few more, as you can see here. Look at the debt to equity ratio and quick ratio. Many of these stocks have got lower ratios. And one stock we'll talk about here is Upstart. I know many of you love Upstart. Upstart is a great company. Overall score is 12, as you can see here. And as you see here, both insiders and institutions are selling Upstart. Upstart stock is going higher, as you can see here. It's done nice, and it's got nice short ratio here. I said at this time don't buy, let it cool off a little bit. RSI is also high, and they just have enough money. Debt to equity ratio is 1 here, so I would avoid this one right now. Let it cool off a little bit. It's squeezing the short at this time. It's too hot. I would wait on this one too. And we got a few more here. Apply the same methodology here. All right, let's look at next screen here. It's a continuation here. All the stocks are with the price more than $10, as you can see here. And we got insiders and institutional selling, as you see here. Look, one of them here, JLED, J-E-L-D, JELD. Look, this one has got high institutional as well as high insider selling. Look what's going on, 29 here, both are selling. And stock is trying to go higher in 1 day, but it's not done much in 5 years, as you can see here. And this one has got high debt to equity ratio, 2.3 here. Probably you should avoid such stocks here, given it's not done, made money for investors in last 5 year time frame here. And we got a few more here. Look, we got few more. Probably we can look at eBay here. eBay, everybody knows eBay. eBay has been clobbered off late, as you see here, with the stock down in last 1 year time frame, as you see here. 1 day, 5 day, 10 days, so on and so forth. Look what's going on. Insiders and institutions selling this company here. And even though it's got net margin positive, as you see here, it's got debt to equity ratio. It's a little bit, it's a little high for me. But I would say, this is a good company, but wait for this to settle down. Don't jump in now. Let the price cool off. It's going down because both insiders and institutions selling big time here. And same story with HPQ. Understand both insiders and institutions selling. That's why even though overall score is high, it's a good company. I think it pays to wait for the stock to settle down here and then jump in. And similar story in SEER here, SEER. Look, this one has got both insider and institutional selling here. Overall score is a low, 25. Look what's going on here. Stock is sliding. It's trying to go higher in 1 day and 5 day, mainly because of the short squeeze situation here. I say wait for this one also. Don't need to jump in when this is going on here. All right. Now what we'll do is we'll look at stocks with a heavy insider and institutional selling, volume more than 300K and price less than $10. This is where we got to be careful. I know we have a lot of traders who trade low price stocks here, so be careful when you trade low price stocks. Understand what insiders and institutions are doing. That will really help you out. All right, with that we got here list of stocks. Look at the current stock price. These are not for investors. These are really for traders, especially swing traders who want to go in and out quickly. Look what's going on here. We got insiders and institutional selling. Many times it's double digit selling. You got to be very careful when this happens. As an example, let's look at first company here. IO 54-cent stock here. Look what's going on. This company has never made for money for investors. In a longer term time frame, it's down big time as you see here. And it's got high short ratio. That's why you get some short squeeze type scenarios in 5 to 10-day frame. But in 1 day, it came tumbling down. And RSI is above 50. That tells you not a good time to buy at this time. So I say, be careful here. Look, they don't have enough money. Quick ratio is 0.5. That tells you they cannot meet short-term obligations. So be careful there. Don't try to buy this one when this is going on. Especially insiders are selling big time. Institutions are also selling. So we got a few more here. You could look at maybe one or two more here. Look, we got TTOO here, T2. T2, look what's going on here. They don't have enough money. Look at the Altman Z-score negative. That tells you financially not stable. And look at the quick ratio perspective. They do have enough money to meet short-term obligations. And stock is trying to think where to go here. I would avoid such names. They don't have enough money. Free cash flow is negative, as you can see here. I would avoid such names here unless also look here, RSI is a little higher. You should wait for stocks to cool off. Even if you want to buy, make sure RSI is below 50, then you can jump in. And we've got a few more names here, especially stocks like this one here, URG, high RSI, high valuation, as you see here. Price to sales ratio is 100 plus here. Stock is jumping up here, as you see here in the short term. I would avoid this one also here, given both insiders and institutional selling. And look, we got one more here, IMMR. Look at the insider institution selling big time. This one has got overall nice overall score here. I say right now RSI is let's see, RSI is 44. So on this one also, I think got to be careful here. And stock is trying to go higher, but both insiders and institutional selling here. I think got to be a little bit careful. Let the stock stabilize before you jump in here. All right, so we got one more list here, and we can go from there. All right, this is the last list here. Look, all the price here is less than $10, as you see here. And look, we got insiders and institutional selling big time, as you see here. And keep watching the quick ratio and debt to equity ratio. Stocks like the one here, IO, clearly they don't have enough money. You probably should avoid this one. And look at Kala. Kala could be okay. It's got debt to equity ratio is high for the long term, but in the short term they do have some money. But be careful in such names where institutions are insiders selling. Let it cool off, especially when the RSI is high. Don't jump in. Let the RSI cool off a little bit. Let the stock cool off. Then you can decide once the stock stabilizes. So with that, thank you very much. Happy insiding and trading. Happy investing and trading. Please subscribe.